Hi, everybody. Welcome back to another episode of VC I'm your host, Kyle Ellicott, and we are here to talk about fundraising. It's end of year in 2020, and we're just a few quick weeks away from the new year in 2021. And so it is a perfect time to talk about and recap fundraising and the fundraising landscape that we went through both as investors and entrepreneurs or operators over the course of this year. Every year, it is great to reflect on those fundraising times, but 2020, a year different than any other that we've been able to experience for many reasons, as we know, but also from the fundraising climate. We spoke a little bit about investing yesterday. So, from the investor's perspective, what it has been like to make investments in 2020 and the new reality that has been created here this year, next year, and for the decade ahead. But in general, for entrepreneurs and operators, what's it been like? What does the fundraising landscape look like? What are the lessons learned? What do you need to prepare for as we go into next year? That is what we're going to talk about. And for you investors that are listening, we're also going to talk about the areas of opportunity. Where have been some of the best places to get funding or to do fundraising as well? So we brought together two great dear friends of the family here at VCTV to share their thoughts along with mine and on the ground perspective of what they're seeing happening in this space. And if you would like to join us on future episodes to talk about today's subject or different technologies, industries, or regions on around the world, we would love to have you. Do reach out, and we'd love to find the right spot for you. And entrepreneurs, few weeks left. What better way to end the year and start the next than joining us here at VCTV on the virtual stage to share your company, product, or service with each of us to get real-time feedback, also build relationships, and get exposure to our entire live audience. We would love to have you here as the year ends and kicks off to the next. So reach out to the team and or myself, and we will find the right spot for you. And speaking of that team, a huge thank you to the LA Token team and to Maria for making VCTV possible every single day and bringing us all together to share these thoughts and insights with you on your device, your screen, anywhere in the world. With that, I'm your host, Kyle. Let's go ahead and introduce my good friends of the family. Noble, my man, it is a pleasure to see you. It is absolutely exciting to have you join us to talk about today's subject. You do so much on all sides of the table when it comes to fundraising as an operator, as an entrepreneur, as an investor, and also from your former life on the private, or excuse me, public side as well. You sit on all of it. Welcome, a little intro and a little background for everybody.
Hey, thanks a lot, Kyle. I appreciate that intro. I'm the author of several books on investing, commodities, futures. The last ones were Winning the Trading Game and Trade Like a Pro. I currently run Dracone Capital Partners, in which we help founders and Series A, post seed, and that middle range raise anywhere from $1 to $5 million, talking to accredited investors. So we're always constantly fundraising in that space, as well as I'm an investor. Like you said, I'm on the board with M Accelerator. We have a $15 million venture fund in which we assist those who go through our cohorts to have seed capital and to grow and expand. And then as an operator, you're right. I got, and all this started because I filed a patent on augmented reality in clothing. And, we started a company called Where Play Games, in which we put out mobile apps. So we do stuff on the blockchain, NFT, and we integrate all those into games and gaming opportunities. And so we're very excited where we're growing. But yeah, I'm happy to be here. And as always, talk about, the different facets that I'm involved in all along the way.
Wonderful. And we're such an honor to have you as well with all this experience. And then you've got M Accelerator too, and what you're doing there. So tons to share and talk about. But last but not least, Grandmaster of Artificial Intelligence, the one and only, ladies and gentlemen. If you don't know this man, you're about to.
You're Kyle, you're amazing. Poetic pause. No, it's great. Thanks for being here. And, I'm honored. And, was it Bill and Ted's Excellent Adventure? I'm not worthy. Thanks. Anyhow, my name's Gary Fowler. I'm a serial entrepreneur. I love artificial intelligence. We curate companies from around the world using Silicon Valley support. And the reason is half the money in the world is still located there. The valuations are high, and there's a lot of connections, network connections. So I've done 2 unicorns. I was involved in an original management team at Click Software, sold to Salesforce for 1.35 billion, and also Eva, which is my company that I co-founded, I guess 4.5 years ago, something like that, which is one of the top 10 AI HR tech companies, um, and just kicking butt because of the COVID. Our business is up 38x at the beginning of COVID, and it's extended because remote workforces need to be managed, and we happen to be, experts in that area. So, love it. AI is a new electricity, data is a fuel, 5G is a turbocharger, and that's where we want to be. So, thanks, Kyle.
Absolutely. And speaking of your company, you guys are crushing it. You just shared a few things online. I'm going to give you a shameless promotion moment because you've been building this company. You've also been fundraising, which is regarding our topic today. I mean, what's it like? You went from this ground up idea, and Noble, I'm going to come to same with you with your patent. I mean, you went from this ground up idea to now being one of the top 10, but fairly one of the top 5 based on the latest information you shared with me offline and what you've put on social media. I mean, you guys are crushing it. What was it like going through that journey, and especially this year, fundraising and building that company?
I mean, the situation is, first of all, we didn't start. It's like Slack with Stuart Butterfield. When I talked to him, he said, we didn't start out to do this. We're a gaming company. And I mean, so we started out as a Google like search for the personal cloud, and people wouldn't spend the money and they forgot their passwords. They'd forgotten passwords. And so I had 167,000 users, but people were so used to getting things for free from Google, they didn't want to do it for their own personal cloud. So, uh, I mean, the money raising at the time was not that difficult. I raised $7 million in about 4 months, but it was a different time. It was not a COVID time. Then we pivoted the company. And the second pivot that we did, moving to a smart assistant, was great. But Google started in the smart assistant area, and it's hard to compete with Google. So, same kind of technology, same kind of patents, moved it over to Eva .ai, which is for remote workforce management, because HR is really, when we have capital, intellectual capital in a company, we don't really take care of it, the intellectual and human capital. And so we wanted to focus on that, and it's a hit. We did it 2 years ago, so we were a year ahead of anybody else. And I'm proud to say that we just got rated higher than SAP SuccessFactors and Workday in the Magic Quadrant. So we're moving in the right direction, and we have revenue. We've got a great team, and my billionaire partner's happy. My
Which
best
is
friend, billionaire partner, like my brother,
which is all good as well. And Noble, I want to come to the same question as you. I mean, you filed a patent because of that sparked this realization that there's a business around this idea and technology that you patented, and you now built a company and you fundraised for that. What was that process like in general, but even more so here in 2020?
In general, it was, to be frank, just difficult. I'd sold off my percentage in my hedge fund, and nobody knew me as kind of a tech entrepreneur. I've invested in projects over the years when it came to cellular technology and the conversion from originally specialized mobile radio to cellular that we have now. And then I was just kind of out of the scene. My whole focus was always on commodities and futures and, trading and coming up with algorithms to trade. So it really wasn't my bailiwick. I wasn't like the guy to go to. So when I got back into the space and I started to navigate, I was an outsider, to be honest. Nobody really wanted to participate in what we were doing. They saw some of the value, but there's other people who had other similar ideas or projects. And so I ended up going the simple route of just doing a 506c. And at the time, the Jobs Act allowed you to start talking to accredited investors, but more importantly, advertising that had never been allowed under a Reg D marketing. The whole rules and regulations, you couldn't market, you couldn't advertise, had to have prior relationships. And that's really why I wrote all those books in the past, because again, I was a new guy in commodities and futures, and talking to accredited investors, we wanted to kind of build a database. So I had a database of about 125,000 investors that we started talking to what I was doing now. And we raised our first like 1.5 million total to start creating and developing the project. And then we did Kickstarter, had another relationship, and we did a couple 100,000 on Kickstarter. And so that really was kind of my entree. Now, at the same time, I joined Founder Friendly Labs up in San Jose. We hired Perkins and Coie, which is a real popular law firm in Silicon Valley, and they still represent our tech firm today. As well as we joined M Accelerator in Los Angeles. And for me, that whole angel VC world, it was just very difficult as far as seeing them, aggressive on valuations, aggressive on wanting a part of the company. So fast forward in 2020, because that was about 3.5 years ago when I started this project. So fast forward to 2020, it's still in the space where we focus in. I've got a lot of angel relationships, a lot of family offices from my hedge fund days, but I still like working with the accredited investors solely because they aren't looking for unicorns. It's great to be part of a unicorn exit. It's great to be part of unicorns. I'd love to be part of a unicorn one day, but I've also been part of a lot of lifestyle businesses where we're doing tens of millions a year. And that's just not the Silicon Valley, perspective all the time. They don't want to be part of lifestyle business, whereas some entrepreneurs just want to do really well with their ideas and projects. And so I found that particularly because of the Jobs Act, it's opened up so much for what we call accredited investors or just regular people, because a lot of the rules have changed. And so there's $9 trillion sitting around in retirement plans and IRA accounts. And a lot of those people are now starting to and have been deploying them on WeFunder, Start Engine, directly with companies. And so that ecosystem I've been really appreciative of to kind of level the playing field, because there's a lot of entrepreneurs with good ideas, but are just never going to get over the hurdle of being accepted into the whole angel investor, Silicon Valley, grow mentality. And some people just want to just build a great business and do multi-digits. So we've seen, especially this year, such explosive growth in that space, and new exchanges are coming up. The Dream Exchange is coming up that just got approved, and we're about to invest in them, which is about small 506 crowdfunded businesses growing. You've got the new regulations with the SEC allowing Reg CF going from $1 million raise to $5 million raise coming down the pipeline. They changed the definition of what an accredited investor is. It used to be really stark metrics. So now instead of just 20 million people qualifying to be accredited investors, it's over 40 million plus people who can be accredited investors. So there's a lot of stuff in that space that I'm really enjoying.
I want to dive into that fact for a moment. So I think entrepreneurs may or may not know that this is something that has happened and what that means for them. So to both of you as investors, but also as operators and founders, I mean, how does this change the game? If all of a sudden now, before I believe it was you could raise 1 million, just over 1 million. Now you can raise over just 5 million as well from non-accredited. But again, the definition of accredited has changed as well. So your pool just opened. And you went from a few options and then a few more options to now many options. How does this change the game? Gary, let's open it to you first, and then Noble, I'll come back to you. But how does this change the game? This change in non-accredited capital, the amount you can take, again, 5x, and the definition of accredited versus non-accredited changes as well. How does this change everything for you as a founder?
Well, I mean, the situation. So one of the things that we try to do is I try to find people that have domain expertise and can be helpful. So it's not about the money. It's about the contribution. So that's just the way I play it. Because the one thing I found is if you get dumb money, nothing good's going to happen. Nothing good. You're going to have questions every week. How's my money doing? Do we make a profit yet? It's just amazing. So what I try to do is to stay clear of it as much as possible. Yes, angels or super angels that have had a lot of experience are really interesting. Family offices are really interesting. But me personally, I just stay away from it because nothing good happens. It takes 10 times as much time to be able to babysit somebody. I mean, literally, I just, in a not too distant past, had somebody, and I was going to say the future and hope not, but somebody had invested, some group had invested in one of my companies. I mean, literally called up and, are they making a profit yet? And I mean, this is a startup, right? So, I mean, I try not to do it. Now, family and friends, sometimes yes, as long as you feel comfortable that you're not going to be driven down. But the worst thing that can happen is you get distracted as an entrepreneur and you start to lose your focus. And once you start to lose your focus, then things start to fall apart. So for me personally, I go out, raise the money, whether it's from VCs or family offices, go out and raise the money, or personally put the money in myself and just roll the dice. Once I find people that have an understanding of the market, whether they're smaller investors or going to write a big ticket, that's when it becomes interesting to me. But if you're just in for the money, that's where you're going to have a lot of problems. Let me tell you, I've heard this is a real situation. I heard of in another country, this company got an investment of $250,000, and I happen to be privy to some of these conversations. This very wealthy person invested $250,000, not a shrewd investor. And once he found out that they were going to be moving over to the U.S., to Delaware in a U.S. corporation, he said he wants his money back and another $500,000 because this is a big opportunity. And I'm like, and 4% of the U.S. company. It was like insane. And I mean, we went through 2 months of 6 weeks of trying to explain to them that this makes zero sense. First of all, it's a startup. Now you're taking the working capital and you want $500,000 back that they don't have. And they got so wrapped up in it, distracted the company. We ended up having to, discontinue our relationship with the company because it was so distracting. Nobody could do anything, so they canceled their plans of going global. So these are the kind of things, and especially in other jurisdictions, other parts of the world where there's these not so smart or not smart money.
That's interesting. I mean, Noble, are you seeing similar question, but are you seeing some of the similar effects that Gary mentioned? I mean, again, this changes the game again for companies being able to raise 5x, give or take, from non-accredited or accredited investors, and then the definition of what is or who is, accredited versus non-accredited has also changed. How does that change the game for fundraising for entrepreneurs, but also to Gary's point as well?
It's a mixed bag. I've been in the industry since I was 17, so it's been 28 years. And there's always been this discussion of smart money, dumb money. And the reality is it's really, you have to be confident of the people who you're investing with. I've run into VCs who haven't operated much different from what Gary just said, in which they've made demands and pressures on companies versus even angel investors. So it's not, I don't think it's just the smart money, dumb money conversation. I think that the reality is there's a whole swath of potential investors. And I think that most founders don't know how to do both investor relations properly. And they also don't know how to frame their investment in the right way, so that they always come off as being hat in hand. And that drives a lot of the weakness and this is a whole leadership conversation, to be honest, that drives a lot of the weakness in how they interact and deal with their investors. Every single component of your business is an operations issue, and that also includes the investor component. There has to be an investor relations officer. There has to be an investor relations plan. There has to be quarterly report. I mean, there's a reason why corporations do quarterly and annual reports. There's a reason why they do follow-up. And there's also a reason why there's always these safeguards between voting and the separation between the CEO, CFO, founder from the shareholders, because the shareholders make demands that aren't necessarily good and conducive for the corporation, whomever the shareholders are across the spectrum. And you've been involved, Kyle, for ages too. So you know what I'm talking about. So the reality is, no matter where the funds come from, you have to really understand that investors really aren't doing you a favor. You're doing them a favor by sharing your project with them. And that this should be really a symbiotic relationship, not a relationship that is designed to make you kowtow to he who has the gold. And oftentimes those kind of social dynamics come into play when you're just new, fresh, you're excited about getting the money in. And I believe a lot of those issues can be mitigated by having more investors. I'm one of those people that has a very strict amount that I'll ever let one investor come in either one of my projects or even when I help people raise funds, that I put a cap on their investment so they cannot move the needle, so that you don't have some guy pushing his weight around as if he's an owner when he's just a shareholder. And so there's things that can be put in safeguards that should really be put in place, that even though you may need 5 million, you'd love to get that from one person, or 20 million, you really should break it up. You should never take an inordinate amount from one individual that can sway the company, so that you can also have external leverage. But these are leadership issues that you learn over time. These are not things that you learn like day one. If someone comes with you a big check and wants you to get started, you're like, oh yeah, I'm so excited.
Right.
But then you start realizing the meddling, and the meddling, like I said, has gone across the board. When we were acquiring mobile paging companies and we were doing part of the conversion, we had some decent sized VCs who were participating with us, and they had similar like I said, similar attitudes that Gary's talking about. So you have to kind of really mitigate how you handle your investor relations component of your business, and it should be done not haphazardly. And I think that's the mistake. And then let's be frank, a lot of people who are founders, they just want to do the work. They don't even want to be on the side of raising capital. And so it's a necessary evil for them, and not really a part of the business. It's almost like the dirty part of the business they don't even want to actually function in. And that's also psychologically an unfortunate behavior that forces a lot of these issues that occur. So at the end of the day, regardless of where the funds come from, whether it's from accredited investors putting in 100,000 or a few 100,000 at a time, or large accredited investors or family offices, all of whom, which I like, and I hang out with a lot of these guys, you have to really set, who are willing to put 5 or 10 million, you have to set parameters around the relationship and make sure it's clear and delineated, both verbally and in writing, so that you can't get those pushes. And frankly, I hate to say it, all businesses at some point have had legal issues. There's not one business that I've ever seen, whether it's from internal partners, external investors, you make sure you have your war chest and your attorney ready. That's just how it functions in business. We all would love for everything to work out perfectly, but prenups are designed not for the continued marriage, it's for in case things don't go the way we expect. And I think it's the same type of operations that need to be done with investors.
Right. Fundraising, in a quick summary, is a delicate process. I mean, you really have to think this through. It's not, I think, to both Gary and Noble's points, and even my advice as well, is it's not a one and done. It's not a quick process. Take your time. I know it always feels like you're in a rush to fundraise, because as a growing company, most are. You're living cash day to day, but you really want to think that process through and make sure, to Gary's point too, you bring in people with the experience, with the knowledge, with the industry expertise. To Noble's, you find that right counsel, that right number that best works, right? Having 100 investors may be great for some companies, it may not be great for others. And you have to manage all of those investors and their expectations, along with your company and your team and the growth of everything and your customers. It's a lot. So take that process as it grows. Gary, I want to switch subjects real quick. I want to come to you real quick on AI, and then we'll talk about fintech and a few other areas. But artificial intelligence, fundraising in AI right now, I mean, what has that process looked like? You're also building a fund investing in some of these areas. What has it been like fundraising in 2020 around artificial intelligence? And maybe what are some of those opportunity areas within AI that you've started to see a little bit more interest in?
I mean, the situation is, the data has dramatically increased, as we've talked about many times. So we're in a situation of turmoil in terms of data and state of infobesity. And so the amount of data around is to dramatically increase. I mean, it's, as I've said many times, there's 40 zettabytes of data. If I stack DVDs one on top of another, it'd be 29 trips back and forth to the moon. There's that much data that grows at approximately 61.7, 62% per year. So we're inundated. And in order to be able to survive and go to the future, think about all the changes that need to take place. So we've got population in the last 100 years has quadrupled. By 2100, it's looked at 13 billion, if it even slowed down. We've got a lot less potable water, drinking water. the amount of land we're all going to be able to live on is going to decrease. The amount of resources we need, food is going to increase. We've got global warming. There's a lot of challenges. So, in order to reach for the stars, in order to be able to get our supply, I mean, think about it, Kyle. This is like, I'm a country boy, but when you can't get toilet paper and you have quantum computers, there's something wrong with that picture.
Mhm.
I mean, it's crazy, right? Or Scott, I mean, people were desperate. I don't know about you. I did it myself. I went into Costco and I would freaking run back to the thing because I thought I'm not going to be taking a shower every day, 4 times a day because I don't have toilet paper. It's crazy. You know what I mean? And so, I mean, we laugh about it, but we all thought the same thing. And it's kind of funny, and it's, these are basics. So what we understand is that AI and the supply chain, that we've had some significant challenges and we didn't have insight into the supply chain to understand exactly what was happening. And we had better get that straightened out. And now's the time to do it. Why did it happen? Because we had just-in-time inventory. Well, just-in-time inventory doesn't work if you're in a pandemic. It just is not the way to do it, right?
Right.
So, and thank God the pandemic is horrible, but it could be a lot worse, right? If Ebola or some other really bad
Mhm.
infection came out, or virus, we would be in bad shape. So, AI is the opportunity to be able to take that data and make a whole lot of sense out of it, whether it's unsupervised, semi-supervised AI. And as individuals, we can't even make decisions on our own data anymore. We're inundated with personal data. It's in the cloud. Where did I get this email? Where's my file? I know you sent it to me, but I can't find the email. Can you resend it? How many times a week does that have? It's crazy, right? If you're not on, I mean, their phones now are like an extension of your hand. How many times do you pick it up a day? 200? It's crazy. So what happens is we need to go down through. Then the other thing is, we're only here a short period of time on this planet, 75, 80 years. And the life extension, living to 120, 150. Well, in order to be able to do it, it's just like I told these pharmaceutical companies about a month ago. The ability to be able to live to 120 or 150 has a lot to do with being able to discover the drugs and not doing all this bench time and taking years, but be able to iterate in hours or days. So if you look at some of the top three cures for COVID or potential vaccines for COVID, a lot of them came out of AI, right? They were done. A lot of what they discovered is because of their artificial intelligence, whether it's Watson or others. So we are on the verge. It's already started to happen. If we use Google every day, people take it for granted. But I remember when, I did a project with Sun Microsystem and I had reams of paper and that was the web. And now we take it for granted, right? Do you remember? I don't know if you remember, but I literally had paper this thick. I told them, so at Sun Microsystems, I worked for Scott McNeely. And I remember paper this thick, only this thick, of all the websites in the world. And I said to him, I'll never forget, I said to my support person, I said, listen, I got a question for you. How the hell do I know what's there? Right? That was my first thing. I said, somebody's got to figure this out. Of course, then browsers and Netscape Navigator and all that. But the net is we're inundated. Google goes down through and does a great job of bringing information to us. But even now, it's way, way too much. We got to be able to synthesize it. We've got to have intelligent AI assistants that can help make our lives better, live longer, and to be able to manage this massive data that's coming at us every day.
Absolutely. And Noble, same question to you, but around AR, VR. I mean, you're working with M Accelerator. You're also building in this space. What does fundraising look like for those companies and those areas of opportunity around AR, VR over the next, this past year and then maybe into a little bit next year?
Yeah, I mean, the fundraising in augmented reality was really bumpy. Everybody was super excited several years ago when VR was kind of the conversation, but no one could really figure out what the practical application was or how to get that winning app. And so the funding dried up, and that's really why we started focusing on the accredited investor space, because I really wanted to see what I was building come to life. Since then, it's really changed. The conversation has gone from augmented reality and virtual reality and Gary hit the nail on the head. It's just visual science. It's a form of AI. And it's really, how do you get the visual science to both deploy, recognize, and then create an event that happens? And so we had to even reframe our conversation from the gimmick of augmented reality to more of the sustenance of what AR and virtual reality can do when you really focus on the visual science component. Computers are now, being able to recognize, getting closer and closer to how fast the brain recognizes both faces and images and the like. There's bias and there's confusion on what things are how they're working out now. There's racial bias and there's other things, but that's really all, I believe, a temporary stopgap to where this all progresses as we drive forward. And there's no doubt that the future of all technology is going to involve, so it has to involve some form of artificial intelligence, not so much just on parsing the data, but just taking the data in. The brain, people forget our brains, and maybe I've forgotten the exact number, is something like 20 to 30,000 micro elements are being driven into your brain, but you're only focusing on one item at a time. So when they do hypnosis or regression, you're able to now pick up that you heard this sound or you saw this thing because your mind was only able to focus on one thing at a time. That's really where we're at now. We're so inundated that we miss all the nuance, all the subtext, all the data that's being driven at us, both in entertainment as well as just pure random information. And so, as we're looking as investors, this is a space that everyone wants to be in. And when people see artificial intelligence, it runs from deep AI to heuristics to, there's so many layers on this, and that we've found that the visual science component has been easy to explain, and then we've married that with the DLT, the distributed ledger technology, the blockchain, showing that there's really an integration between the two, that utilizing both visual science to display this data. We all know about public and private keys. It's almost impossible to keep and manage all of them, but using visual science as a component, particularly what we're doing in gaming, is now starting to allow people to visual representation of these items. One of the beautiful things that Apple did from day one is that they created a user interface to the point of where Microsoft had to go to court to justify the stealing of how Apple functioned in its user interface. They ported that over to the cell phones, and now it's the same thing, that people need visual representation to be able to interact with the data, because there's no other way. Human beings are visual creatures, and it's so much information. And so this space, we found that there's a lot of investment, a lot of opportunity, in which you're marrying both visual science, you're marrying visual elements so people can manipulate the data easily. We're seeing group manipulation of augmented reality, and that's starting to refuel the kind of the passion of where this really can go, in both educating people and showing people what to do with this technology. And so that's been the exciting part. All the industrial elements with augmented reality, all of the visual elements to manipulate the data in a visual way. Just as a side note, I saw Discovery the other day. I'm not a big Star Trek fan, but I've been watching Discovery, and they literally are using augmented reality projection to be able to manipulate data in a way that is plausible now and is capable, where you're having a almost a Pepper's Ghost image that you're now manipulating the data to do things that you need for major functions. This is really where we're headed, and it's kind of fun seeing shows that are playing with those elements of today's technology that can actually be implemented now for the long run.
It's a very good point. And gentlemen, I want to come to both of you for closing thoughts and where you can be found to continue the conversation as we come to close here, because this is a good topic, and also being on both sides of that table, or all sides of that table, it's good for those to be able to connect with you afterwards. So Gary, any closing thoughts that you would like to share with the audience today as we come to close, and then where can you be found online to continue the conversation?
Yeah, sure. I mean, this has been a digitally transformative year, and it has let humanity understand how vulnerable we really are. With all the incredible technology we have, the vulnerabilities that we have. And so at the same time, it's helped us become closer to our families, because it's fear, right? And inability to be able to travel, all kinds of things added up. So it's changed us a lot. And sometimes, some ways we're back 30 years from where we were a year ago. In other ways, we're ahead 30 years because we understand how important that personal touch is. And it's not just about technology. So the good news is the companies that are embracing technology, the Zooms of the world, the ability to invest without ever having to really be in front of that person physically today, those companies, those startups are going to go ahead. There are some barriers, but every startup I've ever done, and I've done 16 companies, there's always been something. The financial crisis, the dot-com bubble. We were doing an IPO in March. The dot-com bubble burst. In June, we were doing an IPO on NASDAQ. And as a marketing VP, I was responsible for that piece of it, and a senior VP. And it was unbelievable how many people told me, don't do it. You're making a mistake. It's never going to work. And the company sold to Salesforce for $1.35 billion 17 months ago. Now, if we would have listened, we'd have been out of business because the financial crisis did happen. But you got to keep a positive attitude, visualize where you want to go, find great contacts and relationships, just like we have here, Noble and Kyle. I mean, it's great. This is the wave of the future. The connections are key. The network and trust are important. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter or Gary at GSDVS. I'm looking for incredible AI companies that truly want to go global and are thinking out of the box and want to get shit done.
Wonderful. Thank you, Gary. Noble, quick closing thoughts, and where can you be found online as well?
It's easy to find me online. LinkedIn, Noble Dracone. You can type my name in, you'll see my books. You can also reach me on Twitter at Dracone. Just closing thoughts is that the funding is there. You really have to understand who you are as a founder and what you're trying to do. Not everybody's built to make a unicorn company. It's demanding, it's driving, it's ceaseless and it's pressure. But some people are designed to make great lifestyle businesses that do hundreds of millions a year. So the reality is you have to know who you are as a founder before you pursue raising capital. When you know that, then you'll be able to set the parameters that you need as you go forward. Gary hit the nail on the head. Gary, Kyle, some of the best acquaintances and friends that I've made in this whole COVID. We've been talking to each other almost 6 months. And I know you better than some people who are my neighbors that I've been living next to for 10 years. And so the reality is, the capital is there and you have to be willing to step outside your comfort zone. This is not going away. The reality is we are in a scenario where next time we talk, maybe we're all sitting as holograms, right? And it's not a far-fetched opportunity because that's what's coming down the pipeline. I've seen some amazing things in the last 3.5 months, in creating AR lifestyle figures, doing holograms. Everything is coming in such a way that the world that we're heading into is Blade Runner, where the haves and have-nots, the divide is bit by bit increasing. And so it's very important that people really understand what's happening and what's going on, and then just get their toe wet. You don't have to be perfect, but at least step into the space. And if you can, drag family and friends along with you because the future is bright.
Absolutely wonderful. Gary, Noble, thank you both so much for sharing your thoughts and insights today. This is a wonderful topic. Again, you sit on all sides of the table, so tons of perspective to share, more to be had as well as we continue these conversations on VCTV over the next couple of weeks as we come to close. And a big thank you to you, our audience, for tuning in. If you like what you heard, click subscribe, give us a thumbs up. Do reach out. Thank you, Noble. If you'd like to be on a show like today's, joining Noble, Gary, and some of our other investors as well. Thank you, Gary. We'd love to have you talk about different technologies, industries, and regions around the world, sharing your thoughts and insights along with on-the-ground perspective. And entrepreneurs, that goes for you too. Join us on the virtual stage we have here at VCTV to share your company, product, or service, as we spoke a little bit about today and on VCTV, to get real-time feedback, build relationships, and also exposure to our entire live community. With that being said, a huge thank you to the LA Token team and to Maria for making VCTV possible every single day. You can find Noble and Gary online 24/7, 365 in the respected social media and websites, along with shows as well. You can find me as well online at Kyle Ellicott on all social media. And with that,